Welcome to this week's Stock Picks, your weekly actionable guide for the trading week of April 27th to May 1st, 2026. These are educational suggestions only, not personalized financial advice. Always do your own research, verify the latest prices, and consult a licensed professional before making any moves. Investing involves significant risk of loss, including the potential loss of your principal. Let's go sector by sector with more depth this week. I'll give you clear buy, hold, trim, or sell ideas, reasoning behind each, plus higher yield and alternative assets like REITs, treasury bonds, gold, and a broader look at crypto. Starting with energy. Oil prices remain elevated due to ongoing geopolitical uncertainty in the Middle East even after the recent ceasefire developments. The sector has momentum, but we're seeing some profit taking after the volatility. For Exxon Mobil, XOM, currently around $150, we recommend hold. It's a high-quality major with a strong balance sheet and reliable dividend, but we'd wait for a better entry rather than chasing it here. Chevron, CVX, at about $187 is in a similar position. Hold for now. No strong buy or sell signal this week, but both names offer solid long-term exposure if you're already positioned. In technology and AI, the theme continues to be one of the strongest drivers in the market. Nvidia, NVDA, trading near $209, remains a clear leader. We recommend buy on dips. The long-term AI tailwind is powerful, and the stock has shown remarkable resilience. For another strong name in the space, consider Broadcom, AVGO. It's a major player in semiconductors and AI infrastructure. We see it as a buy on weakness for investors looking for diversified tech exposure. For a smaller, higher risk/higher reward play, ARM Holdings, ARM, offers significant upside if AI spending accelerates, though it's more volatile. Speculative buy on dips for aggressive investors. Financials had solid Q1 earnings driven by trading and investment banking fees, but higher for longer rates are still creating headwinds. JPMorgan Chase, JPM around $311, and Bank of America, BAC around $53, look fairly valued. We recommend hold on both. They're well-run companies with strong dividends, but we don't see a compelling reason to add aggressively until we get more clarity on the Fed's path. For defensive and income-focused investors, consumer staples and utilities are providing important stability. Procter & Gamble, PG, near $149, and Duke Energy, DUK, around $128, continue to act as reliable hedges. We recommend hold in both. A standout dividend idea with moderate risk is Realty Income, a monthly dividend REIT, currently yielding around 5%. We recommend buy on dips if you're looking for steady cash flow, though it does carry some interest rate sensitivity. Now let's talk about fixed income and safe havens. Treasury bonds have been volatile with the Fed's higher for longer stance, but they remain one of the safest ways to generate yield while protecting capital in uncertain times. We recommend considering short to intermediate duration treasuries or treasury bond ETFs as a core holding for ballast in your portfolio this week, especially useful if volatility returns. Gold has been under pressure recently, down around 9% since the recent war tensions began as risk appetite returned. It still serves as a classic hedge against inflation and geopolitical shocks. If you don't own any gold exposure, we recommend watching for a dip to add a small position as insurance in your portfolio. In industrials and transportation, lower oil prices are acting as a tailwind. Airlines like Delta, DAL, could benefit meaningfully from cheaper fuel costs. We recommend watching Dow for potential buy on weakness if it pulls back further. Caterpillar, CAT, in heavy equipment is also worth watching for infrastructure-related strength. Finally, let's expand on cryptocurrency. Bitcoin is holding strong near $78,000 with continued institutional interest through ETF inflows. Ethereum is also showing relative strength and has upcoming network upgrades that could drive interest. For additional exposure, consider Solana, SOL, if you're comfortable with higher volatility. It's been gaining traction in decentralized finance and has strong developer activity. We recommend buy on dips across Bitcoin, Ethereum, and selectively Solana, but keep position sizes reasonable given the macro sensitivity and regulatory risks. Overall portfolio tilt for this coming week, we're leaning selective, favor quality technology names like Nvidia and Broadcom on pullbacks, maintain defensive exposure including REITs and treasuries for income and stability, be cautious in energy after the recent moves, and consider a small gold allocation as a hedge. Crypto remains attractive on dips for those with risk tolerance. These are ideas based on current conditions. Always verify the latest data and do your own due diligence. Thank you for watching this week's Stock Picks. If you found this helpful, like and subscribe, and turn on notifications so you never miss Wednesday's midweek pulse or Saturday's full weekly recap. What stock, sector, or asset are you watching this week? Drop your thoughts in the comments below. I read everyone. See you next time.